Hey team, many people want to know, what type of business I'm buying, what industry I'm investing in so that they too can, either invest with me or, buy in the same industry or whatever. Love the enthusiasm. 2024, as we wrap up the year, was the year that I started publicly inviting our community to invest alongside me in fractional acquisitions. This is what we did. We ended up buying an entire real estate portfolio. We bought 6% of a $100 million manufacturing facility. We took out the entire GP, general partnership, of the world's largest mass timber building, all while members in the acquisition lab, exceeded $400 million in member small business acquisitions. It's a fantastic year. Lots of milestones hit, and our investors in the fractional acquisitions are projected to earn over 400% in returns over the next 3 to 6 years. These are deals that are already closed, already done, and it's a lot of fun to invest together. My name is Walker Deibel. I am the Wall Street Journal best-selling author of Buy Then Build, creator of Acquisition Lab. I've been buying small businesses since 2006. I bought a number outright, and I've been doing fractional acquisitions since 2013 as a strategy, to sort of increase my diversification in the private markets and also just be able to bank on other teams. So in that time, some examples of things that I bought a financing platform, a coding academy, multi-screen ad and data company for large businesses, ultra premium television production company, of which I'm a co-manager of, an emerging video game company with some of the world's largest IP, dozens of oil wells, senior secured cash flowing debt on, real estate acquisitions, hundreds of mobile home slots, parking garages, and apartments, and a lot more, but you get the idea. All while, still currently owning my own companies, the ones that I acquired, selling other people's businesses as an advisor and, running the acquisition lab. So what's the story behind this, right? So essentially, while I've been doing this, again, I've been in this for 11 years, and along the way, I ended up sort of, getting in deep with a real estate group that I respected a lot, and mentors of mine were working with, and I ended up being a GP in a couple of projects with them, and ultimately, they reached out to me in February of this year and said, Walker, listen, we've got this little $1.35 million piece on this, 3-building portfolio with a parking lot and stuff. Would you want to help raise for this? And I was like, yeah. And the reason why is because, number one, I already knew the project. It was brought up October last year. I loved it. I was really looking forward to it. Obviously, I still went in and did diligence and all the rest of it. But the point was I was immediately excited at the opportunity. What were my fears? My fears are that, look, I'm known for business acquisition. So coming to you guys and saying, hey, surprise, I'm also a real estate investor, I didn't really know how that was going to go. But ultimately, this was my A team. I've been through the hard times with them. I've been through the good times with them. I know the team intimately. I love the project. It's about 15 minutes from my house. So I went out and said, surprise, I'm also invested in real estate, and we've got this piece with my A team. If you're interested, we need to raise this little piece. We got, a little over, it was about $4.5 million in commitments in about 4 hours, which kind of blew my mind, and also let me know that there was demand to invest in the things that I was doing. And all of a sudden, well, let me run down this rabbit hole for a minute, because I think it's important. A lot of people always ask me, Walker, you've got all of these 800 plus people in Acquisition Lab. They're all buying small businesses. Why don't you build a fund around them, right? And the thing is ultimately, maybe a video for a different time, but ultimately, I think that acquisition entrepreneurship model is entrepreneur-centric on purpose, That's actually how it's engineered and why I think it's such an exceptional model for budding entrepreneurs or, mid-career managers to sort of make the leap and buy companies, right? Things that are already moving, already going, existing concerns with revenue, infrastructure, customers, cash flow, right? Historical valuations, and frankly, low multiples compared to any other asset class. It's a lot of work. It's a great opportunity and something, that I've been doing for almost 20 years now. And so it's one of these where I believe it's an entrepreneur-centric model where if we were to bring in investors for small businesses, we literally would need funds typically run between 12 and 24 assets in a portfolio for good reason. It's the same reason your stockbroker is going to put between 4 and 6% in any one stock. I mean, it's not like 1% in 100 stocks. It's too many, right? You need to have a thesis and it needs to be focused. First problem, Acquisition Lab has all different kinds of industries we would need to focus. Second, the way that we would get investor returns is the same way that venture capitalists kind of get investor returns on entrepreneurs' backs, right? So it sort of would need to switch to our fund getting the advantage in terms of liquidation preferences and all of these other things. Now, there's ways to make it accretive for sure, but let's save that video for a different time. The point is not a nothing but net kind of shot to build build a fund around a large volume of really small acquisitions with first-time managers. Okay, it's a tough thesis to sell and something that at scale is hard to manage. And I don't mean that because I'm afraid of hard things. I mean that because there's a lot of variables at play in order to get that right. And if I were going to start a fund, it would not be that way. Okay, it's not engineered correctly, even though I have a whole bunch of opportunity. Moving on. Okay, the thing is I knew that in order to bring deals to people that I'm investing in, I'm looking for institutional grade deals, professional managers earlier in the life cycle of business where we can actually capitalize on growth and all of these other things. It's a slightly different model with different variables. That's how I expand what it is I'm doing. And I'm looking for supply and demand imbalances at a much greater level than when I'm looking for existing businesses. Okay, it's slightly different, but it's also benefits of the private capital markets, right? So because of the Jobs Act, like in 2016, the SBA changed the rules in terms of what they were actually able to finance in terms of small business acquisitions. I bought 3 companies that year alone. And that was the year that I had been sort of passively working on buy then build for about 3 years. And that was the year that I was like, all right, I need to get this out there. People need to understand what's happening in small business acquisitions. The Jobs Act is similar in that there's this regulation change where I can now publicly go out and say, hey, I'm investing in this thing. Do you guys want to join me, right? And after, the portfolio that we acquired in like 4 hours, it kind of blew my mind. And I thought to myself, there's really nothing cooler than sort of bringing our community together and, me going out and doing diligence on deals at a level that limited partners or minority partners aren't really going to do. So, I've spent low 6 figures on diligence this year, okay, on 3 deals. And so it's one of these where my new guy is from Goldman Sachs. He's underwriting a whole new portfolio that I'll be bringing out probably next month. But the thing is like, it's a different asset class. And I can think of nothing cooler than providing an opportunity for us to sort of play the role of family office together. And then that way I can pick projects that I think meet my criteria. I can do extensive diligence on them and I can bring them to our community and allow accredited investors to jump in if it matches their risk tolerance and financial goals and all the rest of it, right? So it's been a really, really fun kind of game-changing opportunity this year, right? And it works really well with buying small businesses in what I call the wealth stack. So I'd invested. So I did this real estate thing and I knew that I was going to need to bring in a business, obviously. And so it's one of these where I'd invested in a company in January of 2024 that I'd known about for almost a full 12 months before it came to me. And Oren Klaff had started this engineered stone factory that he was essentially building. And it's one of these where there's a lot of reasons why I liked it. And obviously a lot of you watching this may have seen all of the emails I sent on it and maybe even seen videos that I'd done on it before. But the thing is there was a lot of reasons why I liked it as an individual that actually, even though it looks very, very different, aligns very well with a lot of the modeling that I do in buy then build. And quick overview, this was the 81st factory that was supported by, Breton in Italy. There's 3 people on the management team that have already built $100 million facilities of Breton exact same product. Third, it's global domination of all of the new technology and engineered stone that is it's like 10 times better than anything that's out there. It looks like real stone. It's amazing. As the factory comes online here in the next few months, you'll start to see product. But the thing is the more I got into it, I was doing this privately because I got it. It was easy for me to get. But the thing is as the new round was coming out, I realized the value of the company had increased like $50,000 by the law firm that was basically taking us public. We're scheduled to go public in about 20 months, something like that. So it's one of these where I liked the deal and I was like, okay, I've got to take this out to people in a way that makes sense. Okay. And so I brought it out and, I gave the pizza by the slice and wealth stack presentation to sort of bridge, the kind of buy then build model to the pizza by the slice model. And it's one of these where we ended up creating an SPV that acquired just shy of 6% of this company valued at $117 million. Okay. It's very exciting. This company is teed up to be one of the largest 1% of companies in the United States, probably in the next 4 months. Okay. We've got all the equipment showing up in Dallas and it's a really exciting time. If you're interested, we do have another round. The paperwork's getting finalized. Obviously, the people that invested last time are up on the new round because now we have got revenue, we've got the facility, we've got equipment, and so we've got customers, and so obviously the valuation continues to increase in our move to go public. And by the way, we're self-listing. There's not like a big parade where things need to work in order for that to be successful. So it's one of these where, that was a really exciting opportunity and a huge success. And I just can't wait for this year to unfold and see how building this facility can kind of change so many things. The third one was back to my real estate team. The next project we brought out was Kyle had basically engineered and got all of the regulation and availability for us to build the world's largest mass timber building about 15 minutes from my house, across from 2 blocks away from the new soccer stadium. And, they had bought 12 acres down there, and we are revitalizing a whole entire neighborhood, essentially gentrifying this whole entire neighborhood because one of the richest families in the country took out an entire dead-end interstate change that never did anything. It was just, a dead end of the whole city. They built a new soccer stadium. It's beautiful, and just unlocked this whole area, of downtown St. Louis that was, built 100 years ago. It's a very walkable neighborhood, really wide sidewalks, not a whole lot of skyscrapers, and so there's a lot of sun that comes in, and being able to sort of city build and, put the bodega here and the brewery there and the cafe there. It's really, really a lot of fun. So we raised about $4 million, and it was a co-GP opportunity, which meant that AHM, I joined on the AHM GP side, and then the co-GP was our community came in and invested in this project. We filled out the entire GP, and now we've got accredited, institutional investors taking out the $40 million LP piece, and we're hoping to break ground at the back end of 2024. Okay, so what a fantastic year. It's one of these where, look, the title of this video is going to be something like, how I acquired 6% of a $100 million company. Look, I didn't do it by myself. I did it with you. Okay. But, I'm teed up for a very exciting year, full pipeline, credit funds, real estate funds, businesses, oil wells, all lined up for 2025. It's going to be very exciting. But here's the thing. Yes, I am doing this, and I think it's a lot of fun and really cool to invest together in the things that I'm planning to stack cash on, and get to invite you guys to do it too. In the meantime, we built the elite acquisition accelerator and acquisition lab. Okay. We've now exceeded 850 vetted members. We anchored in world-class education. We run everyone through an intensive where we work in small groups and one-on-one to get everyone ready, up to speed, through case studies, using higher order thinking, getting all the materials together to get you into, the language, the practices, the tools, the vetted community to exceed your goal, to meet and exceed your goal of actually acquiring a business. I'm happy to report that in Q4 2024, we actually exceeded 400 million in member acquisitions. We get no kickbacks, no acquisition fees, no nothing. We don't invest in these companies. We don't skew we focus on being entrepreneur-centric and helping you achieve your goal of buying a small business. Okay. A lot of people say, Walker, should I be investing in fractional acquisitions, or should I be buying an existing company? To which I reply, yes. Okay. But the point is they're all part of the wealth stack. So if you have, good enough cash flow that you're an accredited investor as an employee, maybe build some fractional acquisitions first. If you're ready to make that leap and buy your own business, buy that business first, build safety. And, if you've got all this extra cash flow that you're wanting to run out and buy 12 companies because you've been reading too much on Twitter, then you should probably put it in fractional acquisitions so that you're not stacking risk. Okay. All of this is a complementary strategy for navigating the private markets and making outsized returns with your sweat, your risk, and, buying businesses and all the rest of it. And then also being able to leverage other teams and supply demand imbalances without outsized risk. Okay. This isn't buying small businesses, swapping yourself out as manager and going to the beach and by then chilling, right? This is finding institutional grade investments with professional teams and supply demand imbalances, the right tailwinds, and all the other things that I look at, plus all of the sort of GP level diligence that I'm able to do on behalf of all of our community, simply because I'm the one putting my name on it and taking it out and managing those funds. Okay, so if you are interested in seeing fractional acquisitions, sign up for my newsletter. We do M&A insights on every Sunday. Go to walkerdeibel.com, sign up for the newsletter. Or if you want to buy an existing business, check out acquisitionlab.com and apply to our community. We've got super vetted there, and we can help you on that asset. And we will see you on the inside. Thanks.